I've attended a Berkshire Hathaway's annual shareholders meeting in the past, although this year I didn't have that opportunity. Due to the coronavirus, Berkshire didn't allow shareholders to physically attend the meeting. Instead, Yahoo Finance streamed the event online. Tens of thousands of people tuned in to watch Warren Buffett, and the Oracle of Omaha didn't disappoint. I stuck around for the entire 4+ hour event. At the start, there was some fumbling of slides with a little bit of a history lesson, but overall, it was a very insightful meeting, just as have been the past years. This year, I even submitted a few questions, but they didn't make the cut. Although a few questions from others asked similar things. For example, did Berkshire end up selling all of its airline investments? Also, how will negative interest rates impact the insurance business? When watching the event last night, I took a few pages of notes. And since I've condensed some of the key topics and my takeaways. Now, before we dive in, I'd really appreciate it if you just tap the like button down below as well as subscribe to my channel. Warren Buffett opened up with remarks about America. Our country is only a little older than both Buffett and Munger's ages combined. That's 185 years versus 244 years for the US. That example just goes to show that in such a short time, we've seen some amazing progress. In 2020, we are now a better country as well as an incredibly more wealthy country than we were in 1789. Buffett chose that date to show various examples of how we've progressed. And to put things in perspective, Warren Buffett also used a thought experiment. If given the opportunity to choose a place and time to be born throughout history, people would be crazy not to choose America in its current day. There have been plenty of setbacks, but American progress overcomes. In Buffett's words, never, never bet against America. The Dow Jones Industrial Average has been around for over a century and continues to climb. Also, financial markets have become more stable thanks to regulation over the years. For example, Buffett highlighted the FDIC multiple times. That's the Federal Deposit Insurance Corporation, which insures your money in the bank up to $250,000. Since the FDIC start in the 1930s, it has helped prevent bank runs and also promotes overall financial stability, all at a low to no cost to taxpayers. Buffett pointed out that people often overlook or underappreciate that fact. The FDIC works similar to mutual insurance companies, and banks have chipped in about $100 billion over the years to its reserves. That's a pretty good safety net. Keynesian economics has also started to take over since World War II. The government has shifted to being okay with operating at a deficit, and Buffett isn't worried about the federal government defaulting or its arbitrary debt limits. These debts will be refunded, and debt-paying capacity also grows with the country. Warren Buffett also joked if he could issue his own Buffett bucks, he would never default because he would simply be able to print more. One question that came up was on negative interest rates relative to Berkshire's insurance businesses. And Berkshire's management has entertained that idea, but it flips financial markets upside down. Buffett openly admitted that he's been wrong about inflation in the past and isn't sure about negative rates. Raising money at negative rates would make things pretty good for borrowers. Overall, America is in unprecedented monetary territory, and according to Buffett, banks are in a very good position. Unlike the 2008-2009 crisis, they're not the main problem today. In response to the coronavirus shutdowns, the government has rolled out huge bailouts on multiple fronts. And Buffett gave kudos to the current Fed chair, Jerome Powell, for the steps he's taken. Although his favorite Fed chair in the past was Paul Volcker. He even recommended one of Paul Volcker's books. I believe it's called Keeping at It, which I haven't read, but I think it might work its way onto my reading list. Buffett gave credit to Congress for acting promptly as well. Sure, there were hiccups, and continue to be hiccups, but Buffett thinks PPP is generally a good idea. He didn't want to get too political with his answers, so he didn't expand on that topic too much. Overall, with recent bailouts, we know the dire situation we've been able to prevent, or at least lessen. Although Buffett doesn't know what the long-term consequences of the monetary action will be. He didn't expand on that, but I'd really love to know his thoughts at some point, and hopefully he sheds some light on modern monetary theory. A few questions then touched on how Berkshire Hathaway is helping its employees during the shutdown. Both Buffett and Greg Abel indicated it depends on each individual business that they own in the short term. But in the long term, Berkshire will have a higher number of employees as it continues to expand. Buffett also said he's not aware of any of his fully owned businesses excepting PPP. And one of Berkshire's big insurance businesses, Geico, is delivering back roughly $2.5 billion to customers due to decreased driving. That's more money in our pockets. Also, similar to other insurance companies, Geico is offering more time to pay and free insurance for a while for people that cancel. Although he did mention recent events will lead to more uninsured drivers on the road, which will eventually put some upward pressure on rates. All right, let's now jump into some more of the portfolio-specific questions. Warren Buffett shared Berkshire Hathaway's quarterly financials, although he said it's not very useful for forecasting. So I'm not going to dwell on those figures. Instead, some other highlights. One of the important announcements was the complete sale of all 4 airline investments. For the total in April, Berkshire sold over $6 billion in stock. Yet he made it very, very clear that he still thinks the airlines are great companies. They just have less upside potential due to the uncertainty around current events. The world has changed, but even with these big sales, Buffett is bullish. Berkshire has close to $130 billion ready to invest. A large chunk of that is in short-term risk-free debt. But Buffett pointed out that's a terrible investment and he would rather invest that cash in a big deal or multiple big deals. He mentioned Berkshire is willing to be a lender of last resort, but he hasn't seen good enough deals come through. Also, Berkshire has invested a bit into the newspaper industry, but that's a drop in the recently, but that's a drop in the bucket compared to close to $130 billion in cash. Even though Buffett is long the American economy, it's still important to be careful with how he bets. Anything can happen in the markets, as we've recently seen. On one of Buffett's earlier slides in the presentation, Buffett shared a much broader subject. And that much broader subject is what he doesn't know. That just goes to show that risk management is vital, along with waiting for great opportunities. Markets are manic in the short term, so you should wait to buy businesses you like when they're trading at good values. Then once you buy, no one is forcing you to sell. Another topic that came up was the energy industry. Berkshire's Occidental Petroleum stake is definitely struggling, along with many other oil companies. And my investment in ExxonMobil is in the red as well, although it has rebounded a bit. Overall, risk is being realized, and some oil companies, mainly smaller oil companies, will go bankrupt. But as Buffett indicated, with lower oil prices, oil supply will decrease a lot over the next few years, and things will balance out. All right, let's now jump into some final questions and thoughts. The second to last question focused on capitalism. Buffett responded that market systems work wonders, but would be brutal if left on their own. With history as a guide, capitalism has been one of the best models, but still needs some fine-tuning. The market is marvelous in many respects, but needs some government. If left unchecked, it can move towards a winner-takes-all system. There's a lot of creative destruction, and we're seeing less capital-intensive businesses take over. There are growing problems with wealth concentration, along with inherited wealth, although it's tricky to find solutions that don't discourage people from working hard. Social Security has been around since the 1930s, but it's now greatly expanded upon. There are many obstacles in the short term, but Americans will find solutions. Warren Buffett has lived through many crises, but continues to play the long game. Throughout the meeting, he repeated that he wouldn't be betting against America in his lifetime, and I won't be either. I'll leave you with one more takeaway from Berkshire Hathaway's 2020 annual shareholders meeting. Given all the talk about bailouts, Warren Buffett said he doesn't want to have to be dependent on the kindness of strangers or even friends. In my interpretation, consider and prepare for a wide range of outcomes. That's why I'm personally living a frugal lifestyle and preparing for a lot of potential outcomes later in life. I'd really like it if you just tap the like button down below, as well as subscribe to my channel, and please let me know if you have any comments or questions.